The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman, Tiger Technicians Hour on this 17th day of September. My pleasure to be here Monday through Friday, noon till 1 p.m. at 877-927-6648. Let's get to the nitty-gritties. As I mentioned on Friday, there was still some residual strength in the Dow. I think it's going to make it just a nominal new high above 26,211. And then we're going to see what happens. And I'll explain what I mean by see what happens. Because if you look at this monthly chart, U-shaped patterns that have been occurring quite frequently this entire year, where there's been a pullback from a significant high, quite a deep U-shaped pattern, comes back. Most of the time we've seen the indices go to all-time highs, or at least to 2018 highs. And in the majority of the cases, that is an all-time high. The Dow, the New York Stock Exchange, and the semiconductor index, the SMHs, have lagged. But the Dow, in the weekly chart, still has very good technicals, 92% in the MACD, in the stochastic, and the MACD is still strong. Nothing as strong as it was back when it made the high of 26,616 on the 26th of January. But still, it is a positive. How do I reconcile all these different aspects? And the aspects that I'm talking about are, number one, there's some residual strength in the Dow. The Dow above 26,211, I think it should happen by midweek to go to a leg D, and then we've got to make some, I have to make some decisions. Why? Because if the MACD, which is deflecting lower right now, crosses positively sharply, that portends higher prices, and then you're looking at an all-time high of 26,616 being tested now rather than later, which is what I've been thinking for a while, that we're going to see some kind of a pullback, and then there's going to be a surge to the upside. But now when I put it together, and I spent so much time over the weekend going through the different charts, long-term, short-term, and all the different indices, this is what I came to the conclusion that this is what I was looking at. The S&P already gone to a peak D. D is where we start to look at a potential sharp pullback, which it did have. Excuse me, it went from 29,1650 on the 29th of August, all-time high at peak D, the fourth highest peak in the Chapman wave methodology, and then it comes down to 28,7692 and rebounds, but it has not gone to a new high. And it looks to me that this H pattern, lowercase h pattern that I drew in, is a potential for a breakdown if the S&P closes under 2882 in the next couple of days. Then it should test 2876 and probably break it, because that weekly chart will start to deteriorate a little bit. It's still at 89% in the stochastic, and the MACD is still good. And the price is still holding very well. So it's numbers that I'm looking at. A close above 2916.50, let's call it 2918 to give it a little bit of room, would be very positive. I just think it's going to be tough to do. Why? Because look at the IWM. The Russell 2000, down 0.88, down 1.01%. The Dow is down 0.08, and the S&P is down 0.27. That is, no, this is UWM. What is the UWM? That was a mistake. ProShares Ultra Russell. No, I meant the IWM. IWM should be down a little less. Yeah, minus 0.58. Of course, it's not 0.58. It's still the deepest decline so far out of the three indices we've looked at. And that made a peak F at 173.39 on August the 31st, all-time high. Alternate count G/C. I'm still going to call it an alternate count G/C, although everything about it says it's going to look like a G if it breaks under 168.50 at any point this week. The MACD is turning down, just crossed negative in the weekly chart. Stochastics at 84%, still good, but turning down. On balance volume is still good. Relative strength is turning down, but still pretty good at about 61%. The weekly chart leads to the monthly chart, and the monthly chart has not yet made in September a new high to extend leg G/C in that monthly chart. Technicals are still very good. Now we get to the QQQ. The QQQ is the Invesco QQQ Trust Series. Also this month has not made a new high. Has the H pattern that I was talking about. I showed the subscribers over the weekend to my opening call newsletter, daily newsletter. 187.52 all-time high on the 30th of August. Peak E at 187.52 in the weekly chart. And so far, it's a leg E with a potential peak E if there's no new high, all-time high this month. It looks to me like it might be tough to do. All right, got that out the way. IYC, very important. Why Amazon is one of the leaders. Made a peak E at 211.53 on the 13th of September, pulling back very sharply. There's no question in my mind that this is all the characteristics of a peak E. Short-term top in the daily. Doji candle I mentioned over the weekend, a couple of doji candles in weekly charts we were looking at. Look at this doji candle, that leg E, potential peak E in the weekly chart, and still a leg E in the monthly chart. iShares US Consumer Services ETF, very important right now. Amazon, what is Amazon? Is it down today? Down 43 at 1927. 2050.50 was the all-time high, had a round number 2013, that same down the 4th of September, peak D daily, peak E weekly, and leg E monthly. Okay, we're watching these very, very closely. Now we're going to go to gold. Gold, and I believe that I've just got the updated thing where I'm getting real time for gold instead of a little bit of a delay. Up 6.3 at 1207. Still stuck in a bit of a range in the H to M pattern right here, H to lowercase h to lowercase m pattern. But what's really interesting is that the weekly chart has had 4 weeks, let's call it 5 weeks, after the low that was made at 1167.10 to really break above the 9-period moving average of 1215. It hasn't been able to close above it. It's touched it, just tagged it once, pulled back. So 12.15 is really important, and then 12.30 is the 14-period moving average in the weekly chart. Wow, if gold can get to that level, it'll say, you know what, dollar isn't going to just consolidate, it's actually going to go down quite a bit more. Right now, the dollar is down 0.45 at 94.49, hasn't taken out the low that was made at trough C. Well, we don't know if it's a trough C because it's a daily chart, but it probably will be if 94.36 is not taken out today. And what's really important about this, I still believe that the beak formation, and I'm going to now put the down a down arrow on the weekly chart to say the daily is in a sell mode, the weekly has just gone to a sell signal. I need to go the entire week before I can call it a sell mode, but because it's below the 9-period moving average last week and now it's below the 14-period, I'm going to say there's a good chance that the down arrow is accurate. And now what we're looking at is silver. So gold is up, sorry, gold, let's do this again. Gold is up and silver is up 0.66%. It's up 0.09 at 1423. A little bit better candle, but really nothing great. That doji candle from last week is going to be really important. You want to close this week nicely above the 39 high of last Friday. I'll be back straight off.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Hi everyone, let me just finish this. I want to do that quickly. I'm doing a left side, right side price time match in the euro-dollar currency pair. Spending maybe a little bit too much to the right, but that's okay. I think these things are going to move quickly when they move. Yeah, that's way too far to the right. So I'm okay. Euro-dollar currency pair 1.169 up 0.006 right now. This pattern, you see, first of all, the daily chart. You see this daily chart right here on the left? There is a potential kind of a head and shoulders, inverse head and shoulders. This is not one of my favorite patterns in the V-shape. I like a U-shaped pattern in the in the head and shoulders pattern. And one of the reasons is that when it gets back to this entire blockage, this resistance zone between 1.17 and 1.17, say 1.176, that's really the big test. Because then it has to break quickly through, otherwise it's stuck and it's going to be pulling back again, stuck in a trading band. So at this particular point, the MACD is good. Stochastic's improving at 61%. It needs a lot more work to get to 80% and holding there. And that's really the dilemma that we're looking at here, just at this particular point. Why? Because we've been seeing so many times this cup formation that just suddenly stalls and changes its characteristic based on a larger time frame. So if you look at the monthly chart of the euro dollar, let me just make this a little bigger. There you are. You'll see that it's got a number, this lowercase h that goes to a lowercase m and then breaks out upside, went above the 200 period exponential moving average of 1.214 in the monthly chart. It went all the way to, what was the high, 1.25 or something? Yeah, 1.255. Then it pulled back under the 200 period moving average, under the 9 and under the 14. And now it's just kind of tagging the 9 and the 14. The MACD did not close down sharply. In fact, it flattened out. That usually is a little bit of a positive. The stochastic is still declining. That's usually a negative. So I'm looking at this and I'm thinking trading range, trading range. And until you see another cup formation in the euro-dollar currency pair, and that should happen quite quickly. It should happen by the beginning of October. the euro dollar should be, it's called the euro, should be at 1.215 above the 200 period moving average. If this is going to create one of those patterns, let me just explain. When the lowercase h or lowercase m finds a support level, it should form a cup formation. Because it's taken time, it's usually more like a bowl formation. Now, what happened here is that there was a cup formation. There was a little bit of a handle right here. So it's like a cup and handle, except on the left side, you don't have a peak in which to call it a cup and handle. It's called a faux cup and handle. So this handle now broke out. It's on one of my favorite patterns because invariably with a cup and handle, not the catch-up wave cup and ladle, which just soars above the left side cup lip. This, in fact, is stalled. So it needs a lot of things to go right for it to succeed in chart formations. And that, getting it right, means that the short term, you've got about 3 days in which to get to 1.176, the 200 period moving average in the daily. However, if it does that, it is then above the weekly 200 period moving average of 1.173. So you've got 2 positives. Plus, now you can say, hey, that looks like a little bit of a head and shoulders, inverted head and shoulders. So I want you to spend some time just to say any breakdown says that this low that was made on the 10th of September of 1.152 is sacrosanct. It must not break. It doesn't even have to be taken out and closed under. It just needs to be taken out. That's just not after this kind of a move. That would be very negative. Okay, so let's look at the USD JPY, which is the euro-dollar currency pair. This is the yen, the dollar yen. The dollar yen, which has gone, just like the Dow, has gone to a peak C here, and it needs a little bit more to get to a leg D above 112.17. It's 111.98. Not bad action. And it looks to me like another cup wants to form as it pushes away from the 200 period moving average, pushes away in the weekly from the 14 and the 9 period moving average, and that monthly gets to that resistance level, a long-term downtrend line. It's just a good start that to break out. It's not a big deal. It becomes a big deal if it breaks out, pulls back, holds that line, and then goes even higher. So you've got a lot to do right here. Let's go back to the dollar just to show you something here. See the dollar? Red, a little sandwich, big red candle Thursday, big green candle Friday, big red candle today, little sandwich effect. Says to me, if there's a close below Friday's low of 94.36, be careful because the leg D will start and that could go a little bit deeper. And then the closer you get to 94, the closer you're going to get to 90.77, the 200 period exponential moving average, the orange line there, wanting it to be a magnet. And there's a potential for a W, a soft W formation in the MACD, but that'll only happen if the dollar by Wednesday or Thursday is trading above 95.10. And it's at 94.50 right now, down 44 cents. And the stochastic week. Now, this is the thing for me. I should do it. I'm just going to show you this. I'm going to have to take it away because it's a weekly chart. I don't want to mix things up. Weekly chart says that so far, 3 hours into the session, we've got the MACD crossing negative. But it's a weekly chart. I got to take that away and just say that I wanted to show you there's a potential and the stochastics weak. And that's suggesting, yes, the beat should go a little lower down. So yes, I am looking at the dollar going a little lower in this consolidation. How high gold goes is going to be very important. The GDX is rallying. It needs to go for leg B. It needs to go above. Doesn't have to close. Just has to spike above 18.42. And the high today so far is 18.42. Can't be. Yeah, 18.42. So it almost made leg B, and that will improve the weekly chart candle formation. But so far, the stochastics at 10%. It really needs to get to 17% quite quickly. That'll be a positive. So far, good action for gold, good action for the GDX on the day, but I need more. I need more. All right. Crude oil, and I believe that this is updated real time. Maybe I'm not right. Tell me if I'm wrong. 68.83 right now, down 16 cents. Tried to rally, failed. That weekly chart says, hey, above 72, it's at 68.82 right now. Above 72, it's really bullish. Below 66, not good at all. and it's at 68.83, 2 points up, 2 points down. It's going to make a big difference, and the monthly still is at peak D. So those are the parameters to look for. And high-grade copper, when I looked earlier in the day, it was negative. Now it's come back. It's at 2.65, down 0.00. It's up 0.007. Yeah, not bad. It's all within a range. The lowercase h goes to a lowercase m. There it is. We'll see what happens here. Absolutely, it must hold 2.58. Is that 2.5745? That is all week. Watch that number. Breaks under it, not good. Now I'm not leaving out the TLT. I spent a lot of time this weekend talking about and showing subscribers a lot of charts based on the bonds. Why? Because the TNX, the 10-year, which is now in leg E, broken above the last peak E way back on the 1st of August at 30.16, plummets down to 28, hits 30.20 today, and it's now at 29.95.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com. TFNN has just launched a Tiger Dollar sale for one weekend only. Through Tuesday, September 18th, you can get up to a 50% bonus on your Tiger Dollar purchase. Tiger Dollars never expire and can be used for any TFNN newsletter or service. TFNN has a new website launching in the coming weeks, and to celebrate, we're having a Tiger Dollar sale. For all the details and to get up to a 50% bonus on your Tiger Dollar purchase today, visit the front page of TFNN.com before this sale ends Tuesday.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Everyone, we're back. So the TNX, which is the 10-year, 29.94, unchanged right now. Spiked higher, pulled back, leg E. MACD is still very strong. Stochastic is at 90%. The last time this happened, the stochastic was at, I think it was also around about up in the 88, 90% area. Slow stochastic. Okay, here it is. 80, 88, 89. Yeah. So, and then it started to turn down. This one has a little bit of a slightly different angle, and it's flattening out at 90.69%. So this is going to be really important. Why is this important? Look at the monthly chart. The monthly chart broke out of its 21-year, I think it is, down channel. And for the past 1, 2, 3, since January, every single month it's been not only above the 9-period moving average and the 14-period moving average and way above the 200-period moving average. It has been way above the down channel Chapman wave inside track repellent zone. This is now becoming support. The way I'm looking at it, I'm saying to myself, this is very interesting, because you've got your little soft W-shaped pattern within the weekly chart after a peak F top a week of the 18th of May at 31.15, pulls back sharply to the 27.60 area, 27.59, and now it's stuck in the range, but it's making slightly higher highs. So this is A, this is B, and this is C. Look, A, gray B, gray C. Let me just double check. I don't want to be talking out of turn here. So that high, week of the 15th of June at 30.09 was just taken out at 30.16 on the week of the 3rd of August. And then today we just went to 30.20. Yeah, so that's leg C. That's called the Chapman wave inside buy mode. Not going all that much higher, but it is going higher and forming a gray ABC. And the technicals, we haven't got the MACD crossing positive yet. It's still just negative, but hey, 3 hours and 3 hours into the first trading day of the week. Let's give it the whole week. But so far, it looks to me like we've got to be watching these bonds really closely. Look at the TBT, which is the inverse of the TLT. TBT went to a leg E. 37.91 was the previous high, peak G in the TLT. And today's high of 37.84 is just 7 cents below the previous one. And it's leg E, but the MACD is good. It was good going to that peak G there as well. And the stochastic immediately from that G turned down. This one is holding quite nicely at 89%. I'm watching this. I think rates are going to be important. And this conflicts with my idea that if the market pulls back sharply, rates are going to go down as TLT bonds go higher for the safety factor, where money migrates from the insecurity of securities into the security of bonds, of the yield. So I'm watching this closely. We'll see what happens. All right, next thing I want you to do was, I've done everything that I needed to do in that regard. I just wanted to show you, I showed you Amazon. Look at Goog. Alphabet is trading down 9 at 1,162, making the lowercase h pattern yet again. It's done it once, which went to a kind of another h or a lowercase m pattern. It's just done it again. Weekly chart, daily is peak E, top 1723.89, 1273.89, and that's a peak D in the weekly. And a leg F, probably a peak F at the end of the month in the monthly. And that's the reason why I'm saying this is not just a bifurcated market, even within sectors. Look at this. Caterpillar, question is Caterpillar usual, Boeing, Caterpillar, DuPont, Goldman Sachs. We've got our usual. Caterpillar's up $1.84, right? But the weekly chart is still ugly. It's better, but it's still ugly compared to where it was at 173s, down to the low that was made just under 130. Now it's at 146, 16 points, nothing to sneeze at, 11%. Hey, what about Deere? Well, the Caterpillar is a Dow stock. Deere is not. Deere is just trying to make a leg D in the daily. Same thing in the weekly chart, not very good looking, or in the monthly. But wait a minute, UTX, which has been leading the charge for the past 4 sessions, and which we are still long, is at 138.25. My target has been 139.24. Today's high was 138.80. I'm not sure if it's going to be able to make it, but that is leg C in the weekly chart, not yet leg E slash C. Is that a leg 36.66? Yeah, that'll be a leg E slash C in the monthly chart. So far, so good. You've got some leadership. Hey, what about J.P. Morgan, a Dow stock? J.P. Morgan's up a penny. What about Goldman Sachs, a Dow stock? Down another $1.54. Looks terrible. The question is, when do I think it'll become a leader? It's this next phase. And I don't know when the next phase is going to start, but it doesn't seem to be starting just yet. We'll see, because I want you to look at the IAA, which is a question I got. Where was it? JP Morgan, Wells Fargo, IAA. IAI down 64 cents, and this is the dealer broker ETF. This is not good. This is not a good sign, not a bullish sign. You want to see people buying stocks. You want to see the brokerage companies doing real well. So for my subscribers, we've entered on Thursday, we entered an ETF that we just avoided completely when all talk of tariff was going on and things looked fantastic and these things were spying. I said, nope, we're staying away, and we stayed away. Now we are long, and they've had one in particular has had the XLF, it's not the XLF, the ETF has had a really good move over the last two sessions since the entry on Thursday, considering Friday and part of today. And the small cap, the low price one that we've got, it behaved very nicely intraday after we bought it, but it kept coming back to our entry point both Thursday and Friday. Today it's spiraling up over 2%. And that's kind of what I'm saying. You've got to be looking at other things going on at this particular point, because if you get stuck just focusing on the same old, you'll get the same old results. And I'm trying my best to try to get away from that, to look for what might be working in this crazy environment. And it is a crazy environment because when last were there talks of tariffs? I mean, this goes back decades. When was the talk of a geopolitical conflict as we've got now financially? That's in the economies, not world problems in terms of fighting, just in terms of economic fighting. Well, this is an unusual thing. And not only that, you've got the same kind of volatility now in something that should be as benign. It's not, of course, benign, but it should be as benign as a nomination for a U.S. Supreme Court judge. I mean, what is going on? Dow's down 4, S&P's down 7. The QQQ right now is down $1.49. And I wanted to look at, what was the question? Oh, Boeing, of course. Boeing, which is a big percentage for the Dow. It's down just 94 cents. It has gone to a leg B in the daily chart. But it's that weekly chart. I've mentioned this before. It's just always interesting to see how chart patterns repeat. There's a U-shaped pattern, and there's a second U-shaped pattern. It's having the same kind of structure. But I think Boeing is stuck in a range, and that range is really 330.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
So looking at Boeing, the 374.48 high on the 7th, I think it was the 7th of June, came down sharp to around about 327 in about 25th or so of June. Then it ran up to a peak D. That was a D on the 7th of June. But the high that was made on the 27th of July, 364.54, was a peak D and way under the previous one. Now you've had a rebound. So this has to be called a gray A because it's under the previous all-time high, important high. It happened to be all-time high, but it's really important high on the left. And we're going to see what happens here because this is exactly the stochastics are right at 80%. That's good. Not great, but good. And the MACD is good. And yet the price hasn't yet been able to get up into the 370s yet. So I'm watching it closely. And my contention has been it's just stuck in a range. I didn't see it breaking to the lows of the May 1st U-shaped low of 311. But I am thinking that the 327 area is going to be really important over the coming weeks. If Boeing fails to get to a D right here, or an E/B, or E/C, whatever it is, when it turns around, the moment it crosses under 350, that target is going to become really important. First, the 362. Low of the 14th of September, week of the 14th, and then 328, the low of the week of 17th of August. Okay, so that's that. The question, I had a couple of questions over the weekend that I wanted to deal with. Oh, yes. So look, IYK, I can't remember what it was anymore, but I remember at the time it was important. Yes, U.S. consumer goods, leg C in the daily, very strong even today, is trying to test. Now, we've seen this kind of inverted head and shoulders pattern before. This is a little different. This has the characteristic of an arch or a lowercase h pattern right here. But at the same time, if you're looking at the MACD and stochastic, they are improving, and all you need is a push above, nicely above the high of 122.02 that was made the week of August the 10th. You want the U.S. consumer, what's the exact title? Goods, ETF at 121.44 up 12 cents. You want to see this thing climb into, kind of get into this bar, the ugly bar, the 16th of March, where it came down from the 124s to the 121s. You want to get in there. You want to get at least halfway into the 123.20 area, something like that, not halfway into the upper part. So that's going to be important. And the MACD and stochastic are good in the daily charts. So this is the consumer iShares U.S. consumer goods. It means people are buying. Wait a minute. What do you mean people are buying? Look at the XRT. The XRT is the S&P retail, which is down 34 cents, making a lowercase h going to a lowercase m after a peak F, all-time high. I should have put that in. On the 22nd of August, it goes to 52.96. 52.96 on 8. Did I say 25? I think so. No, 8.20, or whatever it is, I'll come back. 8. There it is. And that says shorter term, 22nd. Shorter term, there's a real problem, because if it closes under, this is a retail, remember, if it closes under 51, there isn't any support until it gets to the 50 and a half, 50 and a quarter area. And that weekly peak E kicks in, and leg D in the monthly chart. But the monthly chart, look at this. The MACD is at 87% and good. Sorry, I keep saying that. The MACD is strong. The stochastic's at 58% and good. So is the relative strength in the monthly. But you've got the lowercase h that went to a cup formation, yet hasn't broken out significantly. It's gone 51.24 back in March of 2015. It's taken all this time to get to 52.96 week of August. In August. And it's gone to a D. So this is usually where you start to see some deterioration. But how would you know? Well, if you look at the RTH, which is the market vectors ETF, trading down 43 cents after a peak D in the daily and a potential arch formation forming in the daily. MACD is very negative, stochastic is very negative, and the weekly chart is at peak D, and the monthly has gone to a leg E. A little different chart, because this has gone to all-time highs with big steps from peak D, pulls back to the 9-period moving average, big step to leg E, and the MACD and stochastic are still strong. This is setting up for telling us, I would say within a week or two, what the holiday season could be like. So I'm watching it closely. Question I had was, what about the SMHs? Well, the SMHs right now are down 28 cents, I think, yep, 28 cents. Kind of stuck after that major top back in March of 2018, an all-time high of 114.55. You can see that this wedge, it's unbelievable how these patterns form. Look at this wedge pattern. How on earth would a chart know to make lower highs and higher lows until it gets to an apex, which it's starting to get to right now, without taking out significantly the trend line support right here? It's hit it this past week. It went under it, then it came back. Remember, it went to 102, the 102s, and now it's bounced very sharply, and there was an island reversal. This should be very good action, but in fact what it is saying is the semiconductors were leaders right up until March. They've been taking a well-earned, a well-deserved rest, but until they can lead again by going to the 116s or lead by going down below 100, probably the 99 area, that's going to say, uh-oh, real problem here, going to test the 95.47 in an arch formation. So far, it's just stuck in this narrowing, rising and falling two channels. Look, the channel on the downside, that's the channel wave inside track declining channel. And then the uptrend channel has key support starting this week, this week at 104.80. But if it takes out 103.20, it's going to test very quickly the low of last week. So it's just stuck in the range. Interesting, huh? Question I had about the I did Caterpillar. Oh, Triple M I haven't looked at. Triple M right now is up a little bit. Oh, it's up a lot. Up 2.02, but it made a peak D. I didn't type this in right here. 216.37 on the 10th. 216.47, 9, 10. All right, and it's trading at 209.90, but it's that weekly chart that says, hey, you need to see the 220s taken out, held, and all of a sudden you've got much higher lows and much higher highs. That's going to be very important for the monthly chart to improve and the weekly chart. But the weekly chart technicals are good enough to say, hey, this is really good action, but wait a minute, it's not good action because it's not above 216.47. It's still in this narrow rectangle formation between 119 and about 216, 217. So yeah, Triple M, there it is. Next question I had was about the, I saw it earlier on. Oh yeah, question about the 5-year. I said I'd get to the 5-year. 5-year, yes, there it is. So the 5-year weekly chart has had a rising A, peak B, gray peak C, a leg C right now. Oh, I'll talk about it when we get back. I don't have to rush it. We've got one segment to go. I'll be right back.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Hi, folks. This is Steve Rhodes. Stay tuned for another great hour of the Trader's Edge, heard here at TFNN.com.
Hi, folks. Don't forget, Steve comes up, then comes Dave White, and then, of course, Tom O'Brien again. I'll be back tomorrow. So, in the meantime, back at the ranch, I'm calling this a consolidation. Chance the Dow makes a slightly, either a double top or a slightly higher high, and then I think it starts to pull back. The clue will be that the Dow has not been able to help the S&P, the IWM, or the Qs every time it's tried to rally so far today. Not a good sign. Oh, I never even did this in the E-minis. Look, a peak D in the E-mini, 2 peak Ds in the E-mini 5-minute chart, and now it is making the U-shaped pattern. Watch closely. 28.98 has to be support, and above 29.06. You can get a little bit of the bounce into the close. I think that's going to be tough to do. So now let's just go to back to our story here over there. UAL, hey, good eye, Sarah. You were mentioning UAL the other day in the transports. It's up 48 cents at 90.81. Leg C monthly, leg F. I'm calling it an F for now in the weekly, but I would not be surprised if this turns into an instant restart and this is really F/B, because as long as the MACD is good and the stochastics at 95%, that is really good action. That should be helping the IYT. IYT, which is the IYT. Come on, come on, come on. Why am I not getting it? Account and IYT. Should be able to get that. Okay, I don't know. Oh, XAL. Let's go to XAL. Right there. XAL is the airline ARC index. Is making a leg C in the weekly chart. Not bad, not great action, but not bad. So let me quickly sum up things. There are a couple of things going on. Let me just see. I think that's McDonald's. McDonald's was weak. Yeah, it's just down 12 cents. All right, enough with that. Oh, that's MDC. MCD. Down 2.24. So it made a peak, alternate count G instead of a C, and it's plummeting down from the 166 area to 158. Yeah, that's impacting the Dow a little bit as well. Dow's down 40, S&P's down 10. So I'm looking at the S&P, the IWM, the Qs. All of those indices have already done in the daily, made short-term tops. They're pulling back. We'll see if there's enough strength in the Dow to spike a little higher. As I say, we're in a sector that seems to be running strongly right now. I don't know how long that's going to last, but I love the fact that for 3 days it's been acting very well. It's really important that we can identify what's working and what's not. Have a great day. Stay tuned. Check out my opening.
Are you in the market for buying or selling real estate in the Bay Area, including the surrounding St. Petersburg, Tampa, and Clearwater markets? Tiger Real Estate LLC is a firm that has extensive experience in the Tampa Bay area. Whether you're looking to sell your current property for maximum value, or you're in the market for a second home or investment property, Tiger Realty has the experience across all areas of real estate in the Tampa Bay area to help buyers and sellers make the most informed decisions across all price levels. From the price you should be paying per square foot in certain up-and-coming areas to the type of cash flow investment properties are capable of creating, Tiger Real Estate can help you make the best decision when it comes to all areas of the market. Before you make one of the biggest decisions of your financial future, call Tiger Real Estate LLC today at 727-329-8322 or email us at tiger@tfnn.com. That's 727-329-8322. Call us today.